It is estimated during the lockdown period, the vehicle industry was losing something like 2,300 crore rupees a day. And back to back, the component industry was losing anywhere between 1,000 to 1,200 crore a day. The month of April was something unprecedented. Never ever in the history of the automotive industry did we record zero sales. People could be conservative, so that could lead to a spur in demand for entry-level vehicles, whether it's cars or two-wheelers.
India's auto component sector has an annual turnover of about $57 billion and employs more than 50 lakh people. A sector that provides employment to scores has been in a spot of a bother since early 2019, when a sluggish economy hit sales of motor vehicles. Then came COVID-19, and the economic fallout has scorched the sector. To know more about the current status of the sector, what to look forward to, and what's in store for the future, actually, we have with us today Vinny Mehta, Director General of the Auto Component Manufacturers Association of India. Thank you for speaking to us. The first question would be, the auto sector, like I mentioned in my introduction, was in a spot of bother ever since 2019. Car sales dipped to 2 decades low.
Right.
In fact, PV sales were down 13% and below the psychological 3 million mark. What was going wrong then?
Well, the industry has been facing a downturn for almost 15 months now. And, many things happened there in the period gone by. The industry had to transition from BS4 to BS6. The huge investment went in there. There were a lot of safety norms to be compliant with. On the commercial vehicle front, they suffered because the government came up with a notification that allowed the axle carrying capacity to be increased by 25%. So that sucked away 25% of the demand from the commercial vehicle industry. There were increase in insurance costs for which impacted the two-wheeler industry and the car industry rather badly. When we began the last year, the monsoon was a wee bit erratic, and thereafter it smoothened out, but then thereafter there were floods. So that wreaked havoc in the rural economy where a lot of the two-wheelers and entry-level cars sell. So all in all, a lot of things came together. There wasn't one specific thing, but a lot of these things did not augur well for the industry. They came together, and the industry sort of suffered rather badly. It's estimated, why estimated? The SIAM figures say that the overall vehicle sales in 1920 came down by 18% compared to what they were in 1819. And back to back, the component industry also had a tough time. Uh, when you look at the component industry, 60% of our sales go to the domestic OEMs. About 25% goes to export, and another 15% go for the aftermarket, the domestic aftermarket. So 60% direct correlation with the OEM sales, and that had a adverse impact on the domestic component industry in India. And our figures are yet to come, but our estimates are that we would have degrown in the range of 13 to 15% for the year ending March 2020. And yeah, that's how it is. So not necessarily the best of the times for the automotive industry.
Right. So you were hoping this year would be better, but then we all know what's happened in the last 2, 3 months. What is the current status of the auto component industry at the moment?
Yeah, so Pranyu rightly said that, somewhere the feeling was that post March 2020, the things would look up. If we were to go by the response at the Auto Expo, it did not look like something, and there was something was amiss. We were in a downturn. It had all the seedings of a growth, everything looked very, very vibrant. But unfortunately, as we all know, we had the COVID waiting in the wings at that point in time. And by March, the industry started to suffer because, while the COVID did not break out in India as much in March, but the supply chains got impacted because some of us depend on Chinese imports, and that had started showing up. But with the COVID, with the lockdown, and the suffering in the industry was rather immense. It is estimated during the lockdown period, the vehicle industry was losing something like 2,300 crore rupees a day. And back to back, the component industry was losing anywhere between 1,000 to 1,200 crore a day. And of course, it's all written, well written and documented about the challenges that the industry faced. The working capital absolutely dried up in the industry. The month of April was something unprecedented. Never ever in the history of the automotive industry did we record zero sales. And come March, I think almost half the March went by in terms of preparing to open or resume operations, because as you know, there were green areas, there were orange areas and red areas, and unfortunately resumption from a governance perspective wasn't managed very, very well, because it was rightly left to the local authorities because they knew the best.
The month of May and not March, I suppose.
I'm talking about the month of May when we started to resume operations. And I said the first 15 days were literally sort of went in for preparing, because the entire value chain was in quite a bit of a disarray. And there were these red zones where production was not allowed. Then the government came up with a notification it would be allowed. There was a wee bit of a confusion. But at the second half of May, yes, I would say that the wheels started moving in from a manufacturing perspective, but the capacity utilization was rather low, much low to anybody's expectations. The capacity utilization was just in the range of 8 to 10%, because there was enough inventory in the system at that point in time. The vehicle sales were not picking up, the dealerships were not opening up. So that is how it was. And going forward, the month of June progressively is looking better relatively, especially because two good things, because of the abundant Rabi crop that has happened. The rural markets are still vibrant, and the touch wood, COVID is yet to impact the rural markets because of the lockdown that has happened. So the agricultural equipment sales, which is tractors, sort of was pretty good. And we expect in the month of June, two-wheeler sales to be good, because a lot of the two-wheeler sales are dependent on the rural market. And of course, the government has supported well the rural markets with the MSP and stuff like that. So that is good. All the two-wheeler manufacturers are giving somewhat aggressive schedules, if I may say so. Keeping fingers crossed, because we just hope that the coronavirus does not spread the way it is spreading in the major towns and cities, especially for Delhi, Mumbai, and Chennai. And for the other segments of the vehicle, I think even the car schedules are sort of, especially for the larger manufacturers, which is Maruti and Hyundai, and they are coming up by and by. And commercial vehicle industry is still in a spot. It will take still some more time to come up. And we expect when you have the festive season come by in the month of September, October, we would have probably our capacities would have probably gone up to about 70 to 80% of what was in the last year.
What is it currently, if you can put a percentage to it?
Well, in the month of May, it was around 8 to 10%. I would say around June, you would expect on an average in the industry to be in the range of 20 to 25%. But again, if somebody is more a key account is a two-wheeler supply industry, then they would be slightly better. Car would be somewhere in between, and a commercial vehicle, it would be much worse.
Right. Right. So, do you think, from what you said, it seems like the spot of border are the urban centers and the places of urban consumption. That is where you think will be, the tough spot for the industry, and where do you see that panning out?
Yes, indeed. Bigger towns and cities would be a challenge, and I mean, from an economic perspective, they are more prosperous, and for a car sales to happen, that would be very important to have these markets come back. But also, I think uh, what we have observed in China is that because of the need for personal security space and also adhering to social distances, it has helped the car sales come up, and also for two-wheeler sales come up in a big way. So we do hope that that would also happen here, but it's again wait and watch. One cannot be very specific on that. Yeah.
Right. So, your last point is interesting because on one hand, we are looking at, the salary and the amount of earnings of people have come down. But on the
Right.
positive side of it, like you mentioned, there is a
Yeah.
factor where people now feel the need to have a personal vehicle rather than go for something like a ride
Yes.
or something like that. So you think that
Yes.
feeling would be strong enough to, propel the industry? Maybe not in the immediate future, but going ahead now.
So you rightly pointed this. On it's a little bit of a dichotomy. On one hand, when your economic scenario from an individual's perspective is not very secure, you do not know tomorrow you have a job or not. But on the other hand, the need for a personal. The challenge is again, in a country like India, uh, the what you call community mobility, such as the public transportation, is not very well developed. But then there is a need for an individual to move. How does one do that? So therefore, people would invest in personal mobility solutions. Okay, and you're also right. People could be conservative, so that could lead to a spur in demand for entry level vehicles, whether it's cars or two wheelers, because people may want to hold back. But again, because of a compulsive need for mobility, you would have to invest. So, things will be somewhere in between.
Right. Starting May 13th, the finance minister announced a slew of measures for different sectors and industries.
Yeah.
What is it in it for the component sector?
So I think one of the biggest challenges that was facing the industry, and when you look at the texture of the auto component industry, we are very heavily dominated by small and medium enterprises, and I think what the government came in very strongly was to address the problem of liquidity, which was really very, very appreciable. Both the RBI, they made at least 3 to 4 announcements on that front, and similarly, the finance minister announced the collateral-free loans, and also what was very appreciative is the enhancing of the definition of small and medium enterprises, wherein earlier the definition was really based on plant and investments, and it is now based on plant and investments as also turnover. And also there were thereafter, once the finance minister announced, there was also a cabinet meeting where they further enhanced the limits. So if I were to take into account the new definition which the cabinet has approved, that would literally encompass 65% of the ACMA membership. And mind you, ACMA members are only in the organized sector, and they are only the tier ones and the tier twos. So we do not represent the micro enterprises. So I mean, 65% of the people benefiting out of change in the definition is something really very, very remarkable, and all marks to the government on that front. Uh, Having readied the back end, if I may say so, I think it's very important that the government now focuses on demand creation, because without creation of demand, things will not move. So I think the supply side has been very well addressed. Full marks to the government on that. But what really needs to be also done now is to address the demand side of the problem.
Right. Would you have wanted something more specific from the government in terms of what could be done for the sector? What would your wish list continue to be at the moment?
Well, I think it all is about creating a demand, as I said, because the supply side issues are by and large addressed. And when you were to look at a demand side issue, is that one, as I was mentioning in the beginning, that the vehicle prices have gone up significantly because of our compliance when we transition from BS4 to BS6. It's really a new technology that we have put into the vehicles, and there's a lot of compliance with regard to the safety regulations. This has led to increase in prices of the vehicles of anywhere between 10 to 15%. Okay. One of the key asks of the industry has been if the GST rate could be slashed from 28% to 18%. Mind you, in the vehicle industry, the rate is 28%, which is the basic rate, and then there could be a cess that could make the rate go as high as 50%. Okay. So our plea has been that if the government could consider this as a short-term measure to just, give a boost to the industry, because this phenomenon, this phase is not going to be there forever. That apart, from a component industry perspective, our request has been that keep a uniform rate of 18% on all the auto components. Today, about 60% of the auto components are at 28%, and the rest are 40% are at 18%. So our request has been that there should be made a uniform rate of 18% across the industry. Secondly, while if you recollect, the finance minister in the first package that she announced when we were still addressing the industry downturn, she had mentioned that there would be an incentive-based scheme for scrappage. I think it's time that we implement it because the scrappage scheme will not only address the problem of pollution, but also it will create a huge replacement demand. Also, I think specifically from a commercial industry's perspective, when I'm talking about the commercial vehicle industry, a lot of the countries, when you look at how they have handled economic downturns, the government does a lot of investments in highways in terms of housing and stuff like that. That creates a lot of opportunity for the commercial vehicle industry, and therefore, if some of that could be initiated, it could be very helpful for the commercial vehicle industry. And lastly, the government has been in the past somewhat a little too aggressive on regulatory front. Our estimate is that in the last 1 year, almost 40 new regulations have come up. Uh, we're not saying that they should not be there. Definitely, we need to be a world-class industry, and the life of our citizens, whether it's driving or pedestrian, is no less than anybody else's. But our plea is that if there could be a definite roadmap, and these could sort of be introduced in a phased manner, so that we are able to recover the investments that we have done so far. So and every new regulation enhances the cost of the vehicle. So the idea is that go by and buy, so that the consumers can also absorb such a cost. So this is what largely our recommendations are. But essentially, what we're saying is that right now the back end has been well addressed, the supply side has been well addressed. We need urgently something to enhance the demand.
Right. One problem that manufacturing industries are now facing is the shortage of labor especially with
Right.
the movement of migrants. What's
Right.
happening in the component sector?
Well, I would say, you know, uh, it was very unfortunate all that happened. And Till such time the capacity utilization is low, one doesn't feel the pinch. Okay. So as I told you, in the month of May, the capacity utilization was 8 to 10%. Okay. And if you know, typically in the auto component sector, uh, the, the migrant labor or the temporary workers are about 70%, whereas the permanent workers are about 30%. Okay, and this has suddenly become very skewed in the last 3 to 4 years. Earlier, the split was really 50-50%. Okay, we have seen over a period of time the proportion of the migrant or the temporary workers enhance rather steeply. And this is more pronounced when you go down the tiers in the industry. As you know, the component industry is organized in tiers. There are tier ones, the tier two supply to the tier ones, and tier three supply to the tier twos. And progressively, the size of the companies becomes smaller. So, tier ones are relatively bigger than tier twos, and tier twos are relatively bigger than tier threes. And tier threes would largely be the micro enterprises. And the challenge of temporary workers is much pronounced in the smaller companies because here, uh, probably in some of them, 90 to 95% of the workforce is temporary. So as long as the capacities have remained muted, the problem has not pinched. But progressively, as the capacity utilization increases, the industry will suffer.
Right. I think you mentioned 25% of the sector is contributing towards exports. Where does that stand at the moment?
Well, I would say, you see, our figures on the export come from DGCSI, which is the government of India, and the figures are not available per se for me to comment. But what I understand from the industry is that, internationally, because the markets are down internationally as well, they haven't come up to what they were pre-COVID period. So the exports also are somewhat muted. Also, in the month of May, the industry suffered hugely because of challenges of logistics. While people had orders at hand, they got cancelled because we could not deliver them because our logistics were somewhat challenged. They were not operational, to be very honest, in the month of April, in the month of May. Yes, things are improving, but I'm not able to comment because I don't have the numbers at hand.
Right. Last question to you would be, do you think there would be an uptick of demand this festive season, and where do you see where do you see the future now?
Well, you know, I think this was the COVID phenomena was an aberration, to be very, very honest. And if you look at the vehicle population per thousand, it's just about 28 per thousand people. Okay, so you still have a huge headroom for you know 972 more vehicles to be bought if I were to go by that. Also, as we mentioned earlier, mobility, especially public transportation, is still very, very challenged in this country. And aspirationally, people want to have a vehicle. So in that sense, I think, and also to be very honest, the broader economic fundamentals of the nation remain intact. So we believe, once the COVID period is over, things should come back to normal. And we believe, as I told you earlier on, come festive season, our capacity utilization would be almost 70 to 80% of what they were in the previous year. So there's no reason for us to believe that we will not be back on track. keeping our fingers crossed. So, and hoping for the best.
Great. Thank you for your optimism, and we certainly hope that both the component sector and the the OEMs find their feet very soon. And
Yeah. Yeah.
thank you for talking to us.
Need all the good luck. Thank you so much.
Thank you.